What's really good, fam? No intro on this one because I don't feel like it's all that necessary. You're watching Sekitor, and today we're continuing our conversation on Korea's housing market with a short discussion on what's referred to locally as gap-투자. Now, similar to the last video, we're not going to be talking about stocks or assets of that kind, and it should be obvious that this isn't financial advice, but just a reminder that we're here for educational purposes only. I'm thinking that this can be a serious thing, so if you want to follow along, please do me a favor and hit the like and subscribe buttons, and let us do the research for you. Now let's get to it. Alright, so today we're talking about gap-투자, which translates to gap investing. To understand this video, you'll need to know what Jeonse is, so if you don't, I advise that you click in the top right hand corner of your screen right now and watch the video where we explain it in more detail. Otherwise, this video might not make much sense. For the rest of you, let's get into it. Now, gap investing is actually a very simple concept that takes advantage of the small margin, aka the gap, between Jeonse and apartment prices. How? Well, it's simple, and I'm gonna do a thingy to make it clear. Peep game, here's Sehi. Sehi's a first-time home buyer in a small city with some cash saved up from years of working at a 편의점, at coffee shops, and clothing retailers. A standard first-time housing buyer's loan will allow a low interest rate for 30 years on a mortgage as long as the buyer can cover the seed money of about 20 to 30% depending on the loan that they aim to take. Now with 50 million won, this likely means that she'll be able to get a loan for a property worth up to 250 million won. Fast forward a couple months, and she's acquired a little thing in her city, and this is where the magic happens. With a property worth 250 million won, Sehi has the ability to rent it out for Jeonse, and let's just say that the average price for Jeonse in the area is about 80% of a given house's value. That would mean that the Jeonse price would be about 200 million won. Once she has that, she can simply pay back the 200 million won loan that she took from the bank, and voila. She's converted in very short time her 50 million won into 250 million won of real estate equity with no outstanding loans. Sure, she has to pay the interest, so it's not bare clean, but the reality is that she paid 50 million and change for 250 million won worth of an apartment. She does of course have to pay back the Jeonse loan eventually, but as mentioned in the previous video, she can simply find another tenant to fill the role, and if recent memory proves out, she might be able to increase the Jeonse price and take a little bit off the top. In this way, Sehi can capture two sources of profit: increases to the average Jeonse price over time, as well as the capital gains received as the value of the house increases. Even capturing those capital gains isn't as difficult as it may be in other countries, since she can simply list the apartment for its price minus the Jeonse price owed to the tenant. In this way, the Jeonse actually gets transferred to the new landlord, who was able to buy the property themselves for a little less money up front than they would have needed if they had paid full price. So basically, through gap investing, home buyers only really need a down payment to secure full real estate equity of a given property. As we mentioned in the last video, how the landlord chooses to use the Jeonse loan is up to them. For example, if Sehi chose to only pay off 60% of their loan to lower their monthly payments, they could use the remaining 40%, equaling 80 million won, to secure another property worth even more than the first one. This way, Sehi could quickly build her portfolio using the Jeonse leverage method discussed in the previous video. Ultimately, gap investing enables those with few to no assets and few opportunities for leverage a simple and predictable way of growing their wealth with only moderate risk as long as things continue going the way that they've been going. But naturally, all investments are risky, and when it comes to gap investing, there are many ways that the investment strategy can cause much larger issues, and that's what I want to talk about right now. Starting with problem 1. Gap investment distorts demand. Now, in a standard housing market, demand is based simply on the number of people aiming to buy a house, specifically for the purpose of living in it. Of course, there will always be enterprising investors in real estate that are aiming to purchase a property to rent it out, but even if the latter is true, it would still take a significant amount of capital in hand to take out multiple mortgages at reasonable prices. In the case of gap investing, investors really only need very little money to invest in a property, since the majority of the initial loan they took out to acquire the property will be paid off using the Jeonse deposit from the renter. This makes the acquisition of new properties much easier and much faster, which naturally drives demand up a lot faster. If enough people start gap investing, then the market begins to reflect the demand not of home buyers but of speculators. And while this is also true for many other countries, Jeonse loans aren't really on your credit because it's not going through an institution, and this gives you the ability to accumulate properties at a much faster rate. Naturally, faster speculation leads to balloons and makes things bubble up a little more. And that's how we get to problem 2, gap investments inflate the market. This may be obvious, but looking at the system, it's very clear that virtually anyone who knows anything about gap investing would benefit from taking part in it themselves, if they're willing to stomach the risk. The main issue is getting that initial 50 million, or as it's termed here, seed money. This isn't very hard though, especially for Korean nationals, since there are no laws stating that seed money can't come from other banks or credit companies. Theoretically, investors don't even need cash to get involved. That's why. 3. Gap investment shifts the responsibility for the loan from the landlord to their renter. Now this is one for the people out there that actually care about other people, because if we look at the system above, there are 2 loans being taken out. Right? The first loan goes from the bank to the investor for the purchase of the house. The second loan goes from the bank to the renter because, again, these days, if the renter had actually had 80% of the cost of an apartment on hand, they would probably just outright buy the apartment for themselves. Now, in the case of Jeonse loans, banks are actually a lot more willing to give them out because the expectation is that the landlord will return all the money in full and the renter won't be using that money for anything other than the Jeonse. Thus, the renter gives their loan to the landlord, creating the second loan, and the landlord is able to pay off the bulk of their initial loan immediately and save on interest. Now, we're back down to 1 loan, theoretically, but 2 loans because now the landlord owes the renter who owes the bank. So in practice, really, the renter is the one who's actually taking the loan out for the ownership of the rental property and paying off the interest on that loan, while the investor gets all the equity gains. Additionally, there is always the potential for a landlord to fail their Jeonse repayment, in which case their exit plan would be to sell the unit and give the tenant 80% of the sale price. If that 80% fails to cover the totality of the initial Jeonse loan due to a rough market like the one that we're seeing right now, the responsibility for paying the bank back isn't on the landlord, it's just on the renter to pay back whatever they owe. If they have to refinance that loan, then they have to pay any extra interest on it that realistically is because their landlord was unable to meet the payment. But again, as Jeonse itself is its own loan structure, anyone renting an apartment through Jeonse really must understand the risks that they're getting into. And this leads to 4. Gap investing stresses the credit market. As we mentioned before, gap investing encourages the creation of more loans between both institutional lenders and individual lenders through the form of Jeonse. Thus, as we said, 1 loan that was initially just for the house becomes 2, which is 1 between the renter and their bank, and 1 between the landlord and the renter. Now, taking a step back, a huge issue that's arisen over the past half-decade in Korea has been the ballooning of Korea's already massive household debt. On a macro level, a highly leveraged economy is really bad for long-term growth, and there have been calls for years for a steady deleveraging. A failure to deleverage could lead to a future in which further borrowing is very difficult, which could in turn make spending more difficult, and that obviously affects growth. Now combine this with the fact that the birth rate is on the floor and long-term economic growth seems like a pipe dream if the credit market isn't managed more effectively. And that's why 5 is really, I think, the main problem. I could have skipped 1 through 4. And that's that gap investing is inherently speculative. Now this may be the biggest issue of them all. Gap investing aims to capture profits from increasing Jeonse and housing prices. As the market rises, the gains for investors rise, and then so do the prices in Jeonse. If, however, we hit a situation like we're in these days, the reverse may be true, as rates and policies tighten up, making it harder to get a loan. Difficult loans, in turn, drives down demand, driving down prices, driving down Jeonse prices. Now, while this may seem like an issue that's isolated to only those leveraged and participating in a Get-Tuja scheme, renters don't really know whether or not their landlord is in a Get-Tuja situation. And this situation, this scheme, is also one that's been really popular for a long time before the pandemic, and with so many non-investors in the housing market just due to the nature of having bought a house for its functional and not investment value, a falling market could mean a bad situation all around. Now this is all to say, gap investing is a great way for someone starting out to build wealth, since it not only gives them access to outsized leverage when compared to their initial inputs, but it also allows them to lock in their equity early by paying off their loans with the Jeonse deposit they receive. It's a relatively simple path to follow, with very few drawbacks as long as times are good. But With so much leverage spread across so many investors, many of whom have only been in high liquidity bull markets in near zero interest rate environments, who are managing so many properties, Jeonse has artificially inflated the market in a way that is reliant on continued easy credit and a continued rise in the housing market. These are two things that are very much not the current reality that we're facing. With the BOK and the FSS tightening up hard in an attempt to reduce inflation back down to 2%, it's tough to know how much damage will be inflicted on landlords and renters both. It's also up in the air how much longer Jeonse opportunities will continue to exist should the government aim to regulate it out of existence, though I don't personally see that happening anytime soon. All I can say right now, and this is very clearly a moral judgment, a personal opinion, is that this is one of those ideas where short-sighted speculation is and has been self-perpetuating, and it's fomenting a situation when, should the scheme fall apart, everyone, not just renters and landlords, will feel the hurt. Alright, we're hitting 11 minutes, so I'm just gonna dip real quick. I know that people are wondering how loans are structured and whether or not they're set to balloon the way that they did in the subprime market in America in 2008, and I'll definitely get into what I know about the loan structures for mortgages in Korea, but I will say that I don't actually think that they're very much like the asset-backed derivative market that was really what tanked the American market and also threatens it today, but I'll get to that in a couple weeks. I hope y'all are doing well. I'm going to drop another video on stocks because I haven't done that in a minute. Yeah, love y'all, peace.